Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and today I'm joined again by senior trader at T3 Trading Group, Derrick Smith. He's also the leader of the ProDesk VTF with T3 Live. Thanks so much for joining us today, Derrick.
Hey, Greta, it's great to be back. Really been enjoying the format of this program that you've been doing. I really enjoyed listening in to Patrick and Scott and Dan when you had them on. So it's been awesome. I've been hearing great feedback. I actually had a question for you, though,
Okay.
that you're not expecting. We're coming at you with questions
Yeah.
to start things off here. We were
Okay.
debating a little bit with my team and the ProDesk VTF on what this format is actually called. Would you consider this to be a podcast? Somebody suggested it should be called a streamcast. What do you think? What is this?
I'm not 100% sure. I guess I'd say, this is definitely like a live interview format that we're doing on LinkedIn. I think maybe similar to a podcast, maybe a streamcast. I would love to expand this into a podcast in the future. So if anyone has an interest in that, let us know. But yeah, that's a good question for me to think about to, see
Cool.
where we put this. Yeah.
All right.
Thanks, Derrick.
Sounds good. Yeah, I like it. I really like the format, and I like the LinkedIn format too. It's cool that how it
Yeah.
runs through that system.
Yeah, it's been good. All right. So, for everyone that's joining us live, just a heads up that if you haven't been in one of these events before, or even if you have, the chat is open for everyone to ask questions of Derrick. So, you can ask live questions from Derrick during this live event. He'll answer them. We have sorry, hold on one second. Okay. So, for everyone joining live event, so you can ask your questions. I have some questions Derrick and I are going to discuss here to start things off, but start submitting those questions now and then we will get to them at the end. Okay, so Derrick, our first question of all of these is always to grade your week of trading so far. We're halfway through the week, it's Wednesday, so give us a grade on how your trading has been going so far this week.
Sure. So it's been a pretty slow week, particularly Monday and Tuesday. Today was a little bit more exciting with some upside follow through that we got from the market. And even a lot of that took place via a gap. So it took away a bit of the intraday opportunity, but we still did a pretty good job kind of identifying some of these growth stocks and mega cap tech stocks that gave pretty good intraday momentum moves. So I would say that for this week, I really would give myself an A plus because I've done a good job not trading actually in a lot of the
Okay.
circumstances over the course of the last couple of days. And one of the things that I preach all the time about the trading business is it's really important to know when you've got a great opportunity that the market's providing to you and that you need to be aggressive and go after it and trade really actively in order to be able to make money. But other times the market's opening up in a more difficult spot. We don't have the same degree of an advantage, and you need to be a little bit more passive, sit on your hands, preserve capital, and let things build out, let the future opportunities build out, which sometimes that can take several days. So like yesterday in particular was a setup day. It was really a setup day for today. It was an inside day for the IWM. The volume was very low generally for the market, and it was pretty boring and slow. But that helped to create some of the setups for today. So yesterday I did very little. Today I was a little bit more aggressive. So I think that I would give myself a solid A because I knew when to not trade, when to trade less. And today I was able to, turn it up just a little bit.
Yeah. So for everyone listening, just hammer home that Derrick's not giving himself an A because he made a bunch of money so far this week, but he's giving himself an A because he traded properly. He didn't trade when he shouldn't have been trading, and he took the trades he should have according to his own plan and his own strategy when he should have been. All right. So Derrick, it's not just a check-in on the week, but this is also a check-in on the month of March because we're closing in on the end of March. But Friday is the last day, trading day, and last day overall of the month. It has arguably been a very different month than most traders were probably expecting at the end of February. So tell me how you maybe adjusted your strategy throughout this month after all of the turmoil that happened in that second week of March.
Yeah, end of month, end of quarter here, and it's been quite the month. The volatility really kind of turned up. It's been a really interesting market dynamic that we've been dealing with. So
Mm-hmm.
my approach to markets, I'm always consistently looking at three major indices. I'm
Okay.
constantly staring at the S&P 500, the NASDAQ, and the Russell 2000. I'm looking at
Mm-hmm.
those charts on multiple time frames all day, every day. It's the first thing that I review when I do my morning meeting. It's the first thing that I review when I do my afternoon meeting, because pretty much everything that we do as traders, even if you're focused on individual stocks, it really comes down to the market itself. Um,
Right.
we call it a layer of probability. The market is perhaps the most important layer of probability on any trading that you're doing. You know, you can't trade Apple stock and not have an idea of what the S&P and the NASDAQ are doing. As an example, you're putting yourself at a
Mm-hmm.
disadvantage.
Right.
So this has been an extremely interesting month because I've never seen such a difference between how the NASDAQ and how the Russell's traded. And this is based off the fact that we came into this banking crisis.
Mm-hmm.
So if you look at, you know, the S&P, the NASDAQ, and the Russell, those three really important indices, normally they're trading in conjunction with one another. If you see in
Mm-hmm.
the S&P move higher, the NASDAQ's moving higher, the Russell's moving higher, there might be a degree of relative strength or relative weakness somewhere where the Qs are outperforming the IWM, or the opposite, small cap, mid cap is outperforming mega cap. And again, that's represented in the IWM versus the Qs. But this month has been really different because that banking crisis, those regional banks, a lot of them are more mid cap, small cap type companies that are in the IWM. So if you look at like the S&P has basically been in a choppy range for the entire month. But then you look at the NASDAQ, you look at the Qs, it looks like we're in a raging bull market. And then
Yeah.
you go and you look at the Russell, and the Russell completely fell apart because of these banks and has been trending lower, and arguably is in like a bear flag type of a pattern right now, which I've personally been watching to see if that could break up. But there's a monster difference between the Qs and the IWM, which is very unique. And it's made so relative strength and relative weakness is another what we call layer of probability. I already mentioned the market.
Mm-hmm.
Basically, if you go long a stock that's acting stronger than the market, you're going to have a higher probability of success on that long than if you were trying to buy something that's weak. It's just kind of a very general rule. It definitely gets more nuanced than that. But there's just been tremendous strength, particularly in these mega cap tech stocks. And we called for that actually as a team really well right at the beginning of that banking crisis. So you had Friday, I'm trying to remember that exact date, Friday when
I think it was
SVB
March
got
10th.
halted. Yeah, so
Yeah.
the 10th, you had the
Mm-hmm.
big blow up with SVB. The weekend goes by. Coming into that Monday, a lot of fears out there. Oh my God, is the next financial crisis going to be happening? Is this about to be 2008? And
Mm-hmm.
I was saying, I think that Apple runs here. I think that these mega cap tech stocks run. Why? Because it's a flight to safety. And you don't traditionally view a tech stock as a safety play. But you look at Apple, Apple has more cash than most countries. They
Yeah.
probably have more cash. I don't know this is a true statistic or not. They might have more cash on hand than every company in the whole Russell 2000 combined, right? So all of a
Yeah.
sudden, when there's this flight for safety and flight for cash, and everyone is selling their bank stocks and very fearful of that situation, out of nowhere you have Apple start kind of running through the roof. And if you look at the way that the NASDAQ is created, you've got, I think, like 5 companies and create like 44% of the
Right.
NASDAQ.
Mm-hmm. Heavily
So,
weighted. Yeah.
right. So you look at Apple and maybe to a little bit of a lesser degree, some of the other mega cap tech stocks, Facebook or Meta and Microsoft, some of those names, all of a sudden they become safety plays. So they get bought up. And by the way, that's right, as everyone's been hating on these big tech stock companies and
Mm-hmm.
saying, a lot of people, not to get on a tangent, have been saying, and there is some truth to this, that coming out of a bear market, you emerge with new leaders. I don't think that's necessarily has to be true, though it has been true a lot of times in the past. So a lot of people have been
Right.
trying to leave Apple for dead, but those stocks have been working great. They've been safety plays. The NASDAQ chart looks beautiful. And then at the same time, you look at Bank of America and JP Morgan, position disclosure, I'm in both of those names, and I'm in Apple.
Hmm.
So
We
further
do have your
position
current
disclosure.
positions up on screen for everyone. Yep.
Okay, cool. You look at Bank of America and JP Morgan just get decimated because of this,
Hmm.
which is an interesting situation because if you look, the 2 days after the SVB blow up, Bank of America took in $15 billion worth of deposits. So all
Right.
I see coming out of this is the big banks being even bigger and stronger. I understand that there's
Hmm.
some concerns on their margin and of their business that could get squeezed a little bit just because of new regulations and because of the way interest rates have been moving.
Hmm.
But I fail to see how the big banks don't come out of this situation even bigger and better. So then you turn that over to a trading strategy, and it's been an interesting environment because it's been about balancing looking for longs and relative strength in your Apple, in your Meta, in your Microsoft, and at the same time recognizing large degrees of downside extension in the IWM, in the financials, and potentially coming and taking advantage of downside extension for bounce back plays. And
Hmm.
both of those trades have actually been working really well over the course of the last month. So I hope we get through this whole banking crisis unscathed. I think we will, but
Hmm.
I've been loving the trading price action that's been coming from it overall, to be totally honest.
Yeah, as a trader, we've seen way more volatility in the past month than we've probably seen in the past, or not way more trading volume, all of that in the past month than we've seen in recent months. You say you had all the volatility and trading volume throughout COVID, and then things kind of fell off as the bear market, well, volatility was stopping, but volume fell off and all of that throughout the bear market as people were kind of got scared of the stock market. So as a day trader, obviously it's more beneficial for you if there's more volume and volatility happening in the market, right?
As a general rule that I find, so first of all, I don't really classify myself as a day trader, though I
Okay.
day trade.
Yeah.
I do a lot of day trading every day.
Mm-hmm.
But I'm not exclusive to it. I combine day trading and swing trading. I'll hold positions for as short as minutes or for as long as over a year or potentially even years is not that
Mm-hmm.
unusual for me. And a lot of my approach is having more of these core swing positions based on my bigger picture thought process on the fundamental situation that we found ourselves in combination with big picture technicals, and then
Mm-hmm.
day trading actively around those core positions for consistent cash flow. So
Okay.
that's a lot of what I'm doing. But yeah, generally, what we want for active traders, if we can define it that way, as active
Yeah.
traders,
Yeah.
generally what we want is either direction or volatility, or ideally a combination of both to really
Mm-hmm.
try to capture alpha for what we're doing. The worst markets are, and luckily I haven't seen too much of this over the course of my career, but the year 2015 always stands out. A market where we basically go sideways and there's no volatility and no direction, that becomes very difficult to make consistent money. So
Mm-hmm.
this month, even really this first quarter of the year, we haven't necessarily had a tremendous amount of overall S&P market direction, but
Right.
there's been enough volatility and enough
Mm-hmm.
pockets of relative strength and relative weakness. Well, it's been a great year. I actually think that this first quarter of 23, which is about to end, is probably the best I've ever traded. And if it
Hmm.
wasn't for one particular size loss I'm taking, which I'm I'm a fair and balanced individual. I'm sure if compliance, my buddy Steve is listening. He is going to love that I'm fair and balanced.
Mm-hmm.
If it wasn't for one particular outsized loss that I had this quarter, it probably would have been the most profitable quarter of my career.
Huh.
So I've been loving this environment. It's been fantastic.
Okay, so let's talk about the best and worst trades that you've had this month, maybe even this quarter. Uh, I know personally, a loss on Silicon Valley Bank, and that's more related to, the takeover by regulators and the shutting down of the stock. So maybe let's talk about the worst, not, your biggest loss, but your worst trade when it comes to strategy. You didn't follow your plan. You didn't do what you were supposed to do. you totally went against what you had laid out for yourself. Talk about the worst trade that you've had either this month or this quarter.
Well, I mean, I probably would say, and it's no secret because I'm like an open book to the
Mm-hmm.
people on my team in the VTF with what I do.
Mm-hmm.
Probably my worst trade is my biggest loss,
Okay.
though I don't fully fault myself for it, to be totally honest.
Yeah.
So
Yeah.
I got caught in SVB in
Mm-hmm.
whatever the symbol was, SIVB,
SIVB.
on the halt day. So
Mm-hmm.
on March 10th.
Mm-hmm.
And if you are a professional trader with T3 Trading Group, you have access to trading from 4 a.m. Eastern to 8 p.m. Eastern. So I've
Mm-hmm.
got early access. Day before, SIVB is getting destroyed, closes at $106. The next morning, I wake up, I log in, stock is at 80, then it's at 60, then it's in the 40s. And I'm looking at this thing and I really didn't think that there was any possibility. And this is probably my mistake. This is really where my mistake comes in. I probably should have understood the situation a little bit better. I would say
Mm-hmm.
most people at that time probably didn't necessarily think that you'd be looking at a zero within 2 hours on the stock. But
Mm-hmm.
I ended up kind of taking what I planned on being a day trade, like a relatively low risk kind of pre-market day trade in SIVB pre-market. Average price, I don't know, was somewhere in the 40s or low 40s. So I built into a position and planned on using a stop loss, like exactly what you're supposed to do if your trade goes against you, so that in this business, risk is a function of the size that you have and generally the space that you give it. So
Mm-hmm.
if you buy 100 shares and you give it $1 worth of room, you have $100 worth of risk. If you buy 1,000 shares and you give it 10 cents worth of room, you have the same $100 worth of risk. So
Mm-hmm.
I'm like, okay, I'm going to be taking my 2,000 plus shares or whatever here, and this is where I'll get out, and I know what my risk is in the trade, and the stock just got smoked all the way down to $40, and it actually was moving higher when the halt occurred. I
Mm-hmm.
was very, very close to getting filled on an offer, like a take profit offer that would have sized myself down on this position. And then they halted it. It was a news pending halt. And it's like, oh boy, you never want to be stuck in those. Back in 2020, I was stuck in Luckin Coffee for like 2 months in a halt. Luckily, my price was like $2. It was after the accounting disaster happened. And then they unhalted it. I traded out of Luckin Coffee actually profitably, and then they
Mm-hmm.
delisted it. So
Right.
here's this situation. The market hasn't even opened yet. I find myself in this halt. I'm like, all right, like, let's get the news out. Let's get this thing open so I can trade my way out of this position or take my loss or whatever it is. And they
Mm-hmm.
never opened it. So,
Yeah.
that will turn into probably the biggest individual loss I've ever had in my career,
Mm-hmm.
which is obviously unfortunate. Lost
Yeah.
way more than I was expecting. I still have to blame myself to some degree. I probably
Mm-hmm.
shouldn't have been involved in it. It just wasn't
While we're
really.
on this, I don't go to the questions until later, but I do want to go to a question that was just submitted because we're on this topic about SIVB and how you traded it. Daniela asked, why not use options to play the SIVB trade? Why did you choose equity over options?
I don't trade options. Just
Okay.
throw that out there very quickly. I do not
Yep.
trade options. I'm an equities trader. I've got plenty of people on my team who trade options. My thought process towards options, which I'm happy to provide real quick,
Mm-hmm.
is so I'm a professional prop trader at T3 Trading Group. I'm not trading a retail account. So I'm
Right.
not subject to Reg T margin or portfolio margin rules. Most people that I speak to who are in the retail space who trade options, they trade options because of the natural leverage it's inherent in the product to make up for the limitations that they may have from like a Reg T margin account. So
Right.
for me, because I'm a professional prop trader, T3 Trading Group will give me all the buying power that I ever need. We can give extremely high leverage multiples to traders. My thought process has always been, why trade options for just for leverage, which is a less liquid product and subject to time decay, when I already have all the leverage in the world that I could ever want.
Okay.
With that said, to put an asterisk behind that, I do think that options are useful for certain traders in certain scenarios. There are certain
Mm-hmm.
strategies, certain types of spread trades and things like that that you can implement in the options market that cannot be replicated in the equity market. That's not my edge in the market. I'm more of a directional trader. So for my approach, equity suits me fine. But another time, and I know that Dan Darrow, when he was the guest here, actually spoke about this a little bit because the type of
Yeah.
trader that he is.
Mm-hmm.
Another time that utilizing options can be really valuable is in news-based events, like an
Mm-hmm.
SIVB situation, or if you're going into an earnings report, because you know exactly what you can lose. And I've always felt that in equity markets, unless you're holding overnight or holding maybe into an earnings report, you also know what you can lose at any given point in time because you just put your
Mm-hmm.
stop loss in place. It's like I said, I'm buying 1,000 shares and I'm giving it 10 cents worth of risk. I've got my $100 worth of risk. My stop loss is in place. Maybe I can get a little bit of slippage. Maybe there's some transaction costs that are involved, but I've got the same defined risk as an equity trader with a stop loss as I do as an options trader who is gonna, buy calls and let them expire worthless if the trade doesn't actually work in their favor. So
Mm-hmm.
that's always been my thought process, but I've never experienced a situation like this really where, you deal with a halt and they just open the stock at zero. There's no liquidity for me to exit the position. So
Yeah.
yeah, for sure. In this type of event, would have been nice to have calls and just lose a little bit than lose the entire value of the position.
Yeah. Okay. So we've talked about the worst trade you've had this month, and now, you can talk about the good too. So tell me about the best trade you've had this month, and why you rank that as the best you've had so far this month.
Sure. So I've been trading really well this month. I've got a bunch of solid winners under my belt for the month.
Mm-hmm.
Interestingly enough, because I'm generally known for having a little bit of a long bias, and I am very open and honest that I prefer to trade the market to the long side than the short side. Though I do
Mm-hmm.
trade both sides. I'm usually much more conservative on the short side than I'm on the long side. And up until SIVB, all of my worst losses in my career have actually occurred to the short sides. That's why I'm always a little cautious with it. But
Okay.
funny enough, my best trade of the month, which I'm still in a percentage of my original position, has actually been a short in PDD, Pinduo
Mm-hmm.
Duo, which is a
Mm-hmm.
Chinese company. Um, got into it for a few reasons. When the stock was in the 90s, now it's like in the low 70s. So the trade's obviously been working pretty well for me.
Mm-hmm.
I don't like the company. So take a step back. I'm actually very bullish on China. I would say that. Alibaba, JD, there's obviously some risks there. I'm very bullish on China. I'm very bullish on the Chinese economy and the direction that those things are going. And I've wanted to be long a few of those Chinese names, including JD, which I'm currently long for a little while. I've just been shying away. I used to trade the Chinese names a lot more, but when they listed in Hong Kong, the ADRs in the US market started getting a lot more gappy and the intraday price
Mm-hmm.
action got a little bit more erratic. And I felt that took
Mm-hmm.
away my edge a little bit. So I pulled back on how aggressive I trade Chinese names now compared to what I used to. But I wanted to get back involved in JD to the long side. I wanted to have some exposure there. But I'm looking at this PDD. I'm net long the market. I decided that I want to short it. First, so one of the things that my team and I pay attention to is large order option flow, which is typically being executed from institutions. So we
Right.
saw some massive puts hit for PDD. I don't remember what the dollar amount was for $60 when it was in the 90s. Now, I don't just buy or short stock because I see option flow go off and I follow the option flow. I view that also as what I call a layer of probability, similar to what I was talking about with the market and relative strength, relative weakness, where if I'm long a stock and there's a lot of large order institutional option flow hitting the market that's all generally really bullish, I feel like I'm going to have a higher probability of success with that trade. So I saw that go off, and also, have been looking at some research with this PDD and speaking to some people about their business, and so they own Temu, which Temu, from my understanding, potentially has a lot of counterfeit goods on
Yeah.
that site. And I've spoken to some business owners here in the United States who are very upset because they feel that their goods are being sold at discounted prices on a counterfeit basis through that website. PDD is the owner of that. Obviously, I think that's a potential problem for this company. At the same time, there was information coming out about the app. If you have that app downloaded on an Android phone, somewhat similar to the accusations that we've seen with the TikTok app, that it can kind of embed itself into your phone and steal a lot of personal data. So and then eventually, since I've been in the position, Google has actually come out and they banned them from their app store, whatever it's called, based on that. So I'm looking at PDD and I'm net long, so it's nice to have a short on in the marketplace. I want to start buying some JD as well, but I'm going to be a little bit more patient on the JD. But I built into that PDD really heavy. At one point, it was my biggest position by double. I think I was long everything else and short that. And then PDD, has really just kind of fell apart since I've been in it over the course of this month, helped by the market a little bit, some general weakness in those Chinese names. Not so great earnings report, get kicked off the Google playlist. And, here I am towards the end of the month, and it's, I think, by far my best name from a P&L perspective. And it's the short side. So, people say I like to be long and then I don't short enough. Well, there's my best name is to the short side. So there you go.
There you go. All right. So for everyone that is attending live, just a reminder to start submitting your question or keep submitting your questions for Derrick. It doesn't have to be about what we're currently talking about. It can be about anything related to trading, anything you want to learn from him, his strategies, etc. And we will get to those after we talk a little bit more. Okay, Derrick, there is still some more big data to come at the end of this week, the end of the quarter. We're going to get the PCE price index on Friday. That's the Fed's favorite inflation gauge. The banking crisis has kind of thrown a wrench in the Fed's plan for fighting inflation, but they say this is their favorite gauge of inflation, the core PCE price index in particular. So how are you preparing for that data, and how do you plan to trade the market reaction to that Friday morning?
So obviously I have no idea what those numbers are going to look like ahead of the time. I don't have any special information that anybody else, has or doesn't have. So, you're going into an event and information is going to come out. It's been very important to the market, something that's inflation related, and it's going to move the market. We could go up a lot, we could go down a lot, or if it's in line and doesn't surprise any expectations, we get a bunch of volatility potentially, and then nothing happens. And that's pretty much what happened, I think, on the last CPI, actually. Pretty much came in line. Not a whole lot happened. What I've been doing, and I've been having a lot of success, more with CPI than PCE, because we've been getting bigger moves from CPI, but I'll pay attention to the PCE. One of the things that I want to look at ahead of time, and this is something that's really become a bigger part of my game, is I like to pay attention to what the move is for the market that the options are pricing into that. That's something I like to pay attention to into earnings reports as well. So usually there's an expected move based on options that, we could go up or down by this amount. And what I've seen, a decent amount of the time is, let's say that we get a really bad number on this PCE, just as an example. Maybe it's a good number, maybe it's a bad number, no idea. But let's say it's a really bad number, market starts dropping. It's really become very common that we see these at least kind of pause points in that sell-off into the full move that the options market is priced in. So what I've been doing going into these numbers, if we're expecting a really big move, is I find out what the S&P is planning on moving for it. And then I add a premium to it, because most of the time I'm involved in stocks that are a little bit higher beta than the S&P itself. And I kind of layer out some not too heavy bids and offers at around that expected move, looking to see if that number hits. It's really bad, we sell the market really hard, I get filled on those. Oftentimes I'm able to get like a pop off that spot where I can be putting some money in my pocket. It's actually been a fantastic strategy for me over the course of the last 6 months when I've really been implementing it further. Like the CPI day that marks the low of the bear market that we've been in, which was back in October. October 13th, the low of the SPY was 348.11. I think pre-market, when the CPI hit, we traded almost to 345. Like, that was such a phenomenal day for me, because I did this exact strategy. I had bids out, probably coupled to the SPY equivalent of like 346. I got lit up on bids across the board. Market bounce came in. It vastly exceeded my expectation on that bounce. And I was just booking profit, kind of that whole way up. The last few numbers we've seen have been a little bit muted compared to the options expectation. So it hasn't been as profitable. I think, again, on that last CPI, which came in line, and we had a pretty muted reaction to it, I got filled a little bit on the bid in like one or two stocks that I was looking at and made a couple bucks for myself, but it was nothing like that October day. But that's what I've been doing with a lot of consistency. And, again, shout out to the ProDesk VTF. Shout out to Patrick, who you had to interview, because Pat is the man when it comes to getting our team that type of information. So, people ask me a lot, how do you get your information? How do you get your news? How do you get all that stuff? It's entirely through the ProDesk VTF and primarily coming from Pat, who's getting that stuff in there. So I'll, the day before PCE, which I guess that's Friday, right? So like Thursday into the close, I'll go, hey, Pat, what's the market pricing in for the movement on the PCE tomorrow? He'll give me a number, and then I'll potentially base my strategy off that.
Okay. So for everyone, Patrick is Derrick's co-moderator in the T3 Live ProDesk virtual trading floor. Pat will be on with me next week. So there's a quick tease for everyone. We are going weekly with these instead of every other week. So Pat will be my next guest just a week from now. All right, we'll get to my last question here, and then we'll get to some audience questions. So guys, keep submitting those so you can get your personal questions answered by Derrick and what you want to be learning today. So Derrick, the market is pretty evenly split on what the Fed is going to do at their May meeting. A little over half say there's going to be a pause in rate hikes. A little under half say maybe another 25 basis point hike. The Fed itself has said one more 25 basis point hike, then a pause, no rate cuts still till 2024. Market says otherwise on the cuts. Where do you fall on your expectations for the next Fed meeting?
Sure. So, as my buddy Josh Leffler likes to say, who's also in ProDesk VTF, bagel to head, I would go with a quarter basis point. But it's still over a month away, and there's going to be a lot of data that comes out between now and that month. Generally, I think that they'll probably go with 25 basis points, but we have to see what the data looks like. In some ways, these next couple inflation numbers have never been more important, because you could make the argument that the Fed is potentially losing one of its tools right now to fight inflation, which is the ability to raise interest rates. Why are they losing that tool? Because the way in which they've raised interest rates is, or has, caused a mini banking crisis. And that's entirely brought on by the speed and the amount in which interest rates have increased. So every single time the Fed continues to raise rates, they apply more and more pressure where that can happen. There's a couple things that the Fed's really going to be paying attention to. One is this PCE, this next CPI, because if that is coming in lighter than expectations, that could give them the wiggle room to not have to increase. The other thing that they're paying attention to, which I think is becoming really important right now, is the credit market post Silicon Valley Bank blow up, because you've got all of this money that's rushing out of these regional banks and going into primarily the big banks, and that is certainly going to create a tightening of credit, and it's doing it in such a way that in some ways it's doing the Fed's job for it. The thing is, and this is what I've been saying for a while, when the Fed starts making me a little bit nervous about the increases, there's a huge lag behind when a credit tightening event begins or interest rate hikes happen, and you actually see the data come into inflation. It's I've read different reports on it, anything from 6 to 12 months. So
and the biggest lag is in the labor market. Right.
So I give the Fed a lot of credit. A lot of people like to, hate on the Fed. They've got a very, very hard job. Absolutely. They kept quantitative easing and zero interest rates going on for too long, but they're just human. And I think that very generally, we're talking about some very smart people who have a good understanding of what's going on. I think that they're going to be able to do a better job understanding everyone agrees right now that there's going to be some credit market tightening. There's a lot of disagreement on what the extent of that credit tightening is actually going to look like. I think that the Fed's going to be able to wrap their finger around that pulse and be able to make a pretty informed decision a month from now in the beginning of May, based on how these inflation numbers are looking and how much credit is potentially going to be tightening as a result of what we're seeing going on in the banks right now, to make an informed decision on, do we need to do this? Is what's happening in the market enough to tame inflation and bring it back down? If we do this, what's the probability that it increases a potential banking crisis that's out there? I think that they'll be able to come up with that answer. So over a month out, if I have to choose, I'm going to say 25 basis points, but I myself want to see the data. Is the data going to give them the wiggle room to pull back from it? Things are moving so fast in this economy right now, and especially with everything that happened with the banking situation, it's very hard to say exactly where we're going to be 1 month from now when we're going into that number.
Yeah. Okay. So now I want to get to our audience questions, but I do want to start with one that was sent in to you beforehand by William. He is unable to attend live, but we'll be watching the replay and had one of his questions answered. So he asked, for everyone, first of all, who does not know, Derrick, on top of being a trader, is also a former professional kickboxer, and in martial arts are a big part of his life still to this day. Correct, Derrick?
Yep.
Okay. So just a basis for this question so everyone kind of understands where it's coming from. So William asked, how does your hobby/passion of kickboxing and martial arts help in your trading? Specifically, can you address the level of discipline that's helped shape you into a successful trader in person?
Sure. So I really appreciate that question.
Yeah.
It was a big part of my life. When I was fighting professionally, I retired in 2018. I'm not doing that anymore, but I had like 40 fights, professional 12-round fights with people from around the world. I won 2 world titles in 2 weight classes before I retired from the sport. For a long time, my entire life was just martial arts and training and trading. That was like literally my entire life for a very long time. And big shout out always to T3. T3 was actually my biggest sponsor towards the end of my fighting career, when I was putting together world title fights and trying to figure out, am I going to Spain? Am I flying this guy in from Spain to put this event on? So, still really appreciate that T3 did that for me back then. First of all, I would say, martial arts, that's always been my sport. I think that there's a lot of similarities between sports and trading generally. Yeah. They're performance-based activities. It's entirely, and particularly individual sports, tennis or boxing or things like that. If you're getting out on the tennis court, it is the decisions that you make as a player that will 100% dictate whether or not you are successful or not. And it's the exact same thing every day with the market. You can have a good support team. You can be part of the ProDesk virtual trading floor. And we will do our absolute best to support you. But at the end of the day, it's you making your execution decisions with the market, how you're managing risk, how you're managing reward, that's going to impact your success. And again, there's a lot of other similarities. Journaling. Sports journaling is a really big thing. Journaling is actually something I originally kind of took from Kobe Bryant. I heard Kobe Bryant journaled his practices, journaled his games, was always trying to get into his mental state to figure out how he could be better. Well, trading is the exact same thing. I'm a big advocate of trading journals at the end of each day to review the trades that you're doing. And then finally, and this is probably especially true with martial arts, is certain personality attributes that are required to be successful and that are instilled in you through those sports. And first and foremost is discipline. I think that discipline is the most important personal attribute necessary for success in trading. Very often, if I look at someone who does not become a successful trader, I can quickly point to a lack of discipline when it came to money management and risk management. I tell the traders I work with all the time, this business is as simple and as difficult as making more money than you lose. So you got to do. You just got to make more dollars than the dollars that you lose, and you're gonna be good, right? Very simple, but it's not simple. You have to have rules in place that enable you to do that, and then you have to have the discipline. And this is actually the hardest part. You have to have the discipline to actually be able to follow through with those rules consistently. Those rules include ways to limit your downside. I never let myself lose more than this amount trading. Rules for game planning on the upside. This is how I'm going to maximize my reward. You put those rules in place. You show me a trader, and everyone's got their own arbitrary numbers based on account sizes and whatever else. So I always like to keep the numbers very simple. Show me a trader if I can look at their account, and I'm looking at every bad day, every losing day, and none of them ever get past $500 up to the penny. Just this incredible amount of discipline. Every time this trader hits that $500 mark, they're done. They wipe their hands clean of it. And then show me the same trader if he is able or she is able to occasionally have days where they make a multiple of that $500, $1,500, $2,000, $2,500. You show me runs of a trader month over month who has that degree of discipline where they stop every single time at that down number, but also follow the rules for reward maximization, which is the other side of the coin that sometimes traders struggle with. You can almost promise you I'm looking at a trader that's very successful and is consistently profitable with what they're doing. That's really what it comes down to. And again, the discipline to, for me, training camp, 6 to 8 weeks before every single fight that I would do. One of my favorite quotes is a Muhammad Ali quote where I don't actually remember it off the top of my head right now, but it's about how he talks about how the battle is won or lost behind the scenes, away from the bright lights, things like that. It's all about the training that you do ahead of time, the discipline with the training, the fact that you don't feel well today, you have a cold, but you're supposed to get out there and run 7 miles today because it's part of your training regimen. Show me the person who did it, even though they felt like garbage that day. Show me the person who didn't. I'll show you the successful martial artist or fighter. I'll show you the successful trader. The successful trader is the same trader who said, you know what? Oh man, I couldn't sleep last night. I've been struggling with whatever family issue or job issue or whatever it is. But I got to get up at 4:30 in the morning to do my research no matter what. Show me that person who's got that discipline. And again, I'll show you a person who has a significantly higher probability of being extremely successful in this business. So appreciate the question.
Yeah. All right. So now to some of the questions that have been submitted during this event. And for everyone that's still here, remember you can submit your own questions as well. Please do that now so we can make sure to answer all of them before our time is up. So Ben, you and I, or Derrick, you and I at the beginning were talking about, what we call this. Is this a podcast? Is this a streamcast, et cetera, et cetera. So that prompted a question from Ben. Ben asked, what financial podcast do you listen to?
Sure. I listen to a few, and you're throwing me on the spot. So now, of course, I can't remember the names of some of the ones that I listen to. I listen to, oh man, it's with those guys from Ritholtz Wealth Management, Ben Carlson and Michael Batnick.
I don't
remember the name of the podcast.
You can pull up your podcast app on your phone.
Pull it up. I listen to that one, decently religiously, actually, just because I like it's called Animal Spirits. I listen to that one because they, I really like the statistics that they pull off of that. What else do I got in here? I listen to the Trading Justice podcast a bit. They had me on as a guest at one point, and I remember trying to listen to a few of their podcasts going in before I was going to be a guest to get an idea what was going to be happening, and being like, wow, I actually really like this one because I like how you're very market focused, but they bring in a lot of historical context, and I like getting to hear that historical context. I occasionally listen to Masters in Business if there's a guest that I'm interested in. I occasionally listen to Invest Like the Best with Patrick O'Shaughnessy if there's a guest that I'm interested in. So there's a bunch that I go to occasionally, and a few that I go to religiously. I also listen to Pivot with Scott Galloway. I can't remember the name of the other host right now, but I like Scott's take on a lot of the your Warner Brothers of the world, those types of companies, those advertising companies. He usually has some interesting takes on them. So yeah.
All right. There's some recommendations from Derrick for a podcast that you might want to listen to if you're not already. All right. Our next question comes from Drew, and he asked, how are you trading in these tougher, choppier days? What's your strategy?
Sure. So market environments are constantly changing, and that's actually one of the more difficult things about trading. And
Yeah.
you see a lot of different business cycles if you've been trading long enough, a lot of different market cycles, and you can't use necessarily the same strategies for everything. So I was actually just talking about this, I think yesterday, the day before yesterday, with my team in the afternoon meeting. Like, I'm a big fan of the breakout trade, and I think it's a great starter trade for a new trader to learn. It's relatively simple conceptually, it's relatively simple from an execution perspective. But the fact of the matter is that this market environment that you just described is choppy and generally range bound, especially if you look at the S&P, has
Mm-hmm.
not been great for breakout trades. There's still been some that work, of course, but I would say there's probably been a much lower percentage in this environment than there were in some of the years like 2018 or 19, when the market was kind of generally moving higher and you would just take those breakouts and look for continuation on them. So you have to adjust, right? So again, unfortunately, that type of trade hasn't been great in this environment. What's been better in this environment has been more of the extension type trades, which oftentimes inherently mean that they're counter trend. And I would say that I, as a general rule, prefer with trend trades to counter trend trades. If you're buying downside extension or you're shorting upside extension, it's inherently counter trend, at least on that time frame that you're looking at, but it might actually be with trend on a different time frame. So like if you've
Mm-hmm.
got an uptrending stock on a daily chart, but it's pulling back heavily on a 5 or 15-minute chart, and eventually gets extended to downside on the 5 or 15-minute chart, that could correspond with the place in the daily chart where you might get the pivot low for actual big picture uptrend continuation. So it doesn't
Mm-hmm.
necessarily have to be like a pure counter trend trade, but inherently to some degree it is. But those trades in this environment have been working pretty well. And understanding how important the Russell has been to this market has been really important. The last couple of days, last couple of trading sessions, we've had periods of time, and it's just turned into range days. We've had periods of time where intraday the market looks like it's going to break down, particularly the NASDAQ. At one point yesterday, the NASDAQ looked, at one point yesterday and at one point on Monday. Monday, like at around noon, and yesterday, I think earlier in the day, there was a time when the Nasdaq looked like it could completely fall apart and break down, but the IWM was showing relative strength. And a big theme that I've been talking about with my team actually has been potential mean reversion between the IWM weakness and the QQQ relative strength. I just don't think the Qs can have a breakdown when the IWM is acting strong. So I'm looking at Q downside extension on a small time frame and the IWM acting strong, and I go, okay, I'm not going to be afraid to come in and buy the dip in Apple, Amazon, Google, or the Qs right now, because the IWM is confirming it, and I got this extension here where I can look for this bounce, and the Qs have been strong overall. So those types of trades, I think, have been much better with this market. And the extension, again, one of the really interesting things about the IWM versus the Qs right now is we hit a point where, I think it was last week or the week before, one day we had downside extension, like what massive downside extension. I have a way that I measure that I work with my team on, where you hit the point of big downside extension where it makes a lot of sense to come in on the other side. We had
Mm-hmm.
that happen with the IWM, and then like the very next day, we had the opposite with the Qs, where you had massive upside extension where we're coming in and taking the other side of the trade. So I've been, periods of time this month, short T triple Q. Microsoft is my favorite company in the market. I love being long Microsoft. There was one day where I shorted Microsoft because it was just getting a little bit silly on the extension. That was back on March 17th. I think AMD we were looking short that same day. I don't actually remember if I was involved in it also. So that's just been a really big part of this environment, has actually been the counter movements. And one thing that you also have to recognize about a choppy market or a range bound market is inherently what that means. If you're in a range bound market, is a lot of times when the market looks the absolute best, it means that the market's going to fall down. And when the market looks
Mm-hmm.
the absolute worst is when it's going to bounce. And that's how
Right.
and why a range is created. Now, it's not going to last forever. Eventually, one day the market's going to look really good and it's actually going to go and it's going to keep going, or the
Yeah.
opposite. Full disclosure, I'm on the bull side of this market with my thought process right now, and should be happy to get into also. I think there's a lot of ammo out there right now, actually, for bulls, especially with everyone being
Mm-hmm.
so bearish. So if I had to pick, I'm going to expect that upside of this range eventually comes into play and breaks. We even saw a little bit of it today, but it could happen in either direction. I'm wrong all the time.
All right, we'll talk about that bullish sentiment in a second. We have a question about that, but our next question comes from Connor, and he asked if you can go through your screen routine, whether it be daily, weekly, etc.
Screen routine isn't like screening for stocks.
Yes, I believe so. Yeah. For you personally, what
Sure,
is your routine?
sure. So currently I'm out in Idaho, so I wake up somewhere between 3:30 and 4:30 local time, which is 5:30 and 6:30 Eastern.
Mm-hmm.
Within 5 minutes, I have a cup of coffee in front of me because it's already been brewed, and I'm in front of the screens. First thing I'm doing, because I have swings on every day, is I'm seeing where my swings are pre-market, seeing if I need to, based on my pre-thought out game plan, adding to those swings or taking stock off on those swings. So that's the first thing I'm doing. After that, I begin my research process. So again, I got to give a shout out to the ProDesk VTF, because the ProDesk VTF is the basis of my research. Every
Mm-hmm.
morning, we get into the VTF all the updated news, all the earnings reports, all of the analyst upgrades and downgrades. And we're getting news in there in real time. We're getting large order option flow in there in real time. In my opinion, I'm going to give a little tout here to the virtual trading floor, it's like
Mm-hmm.
$500 a month or something like that through T3 Live. Forget it, assume that I am worthless, assume that I'm worth nothing to anyone as far as my thought process goes or anything else. It's still worth more than the $500 a month just for the research, information, and news that we're getting into the VTF each day. And then anything that I can do to help anybody be successful, that's an added bonus. So my process is that I go through the stocks that I'm already involved in, and I go through every single stock that gets a mention pre-market in the ProDesk VTF. It's getting a mention because it's got news, it's in play, there's something going on. I go through every single stock that any trader on the team mentions that they're looking at, that they see a setup in. So that is actually the biggest part of my research process. I also have a universe of like 40 stocks that I go back to very regularly. I type up all the mega cap tech stocks to see where they're trading. I take a look at the financials. I take a look at the energy names. I take a look at a few of the commodities. And I'm digesting a combination of what the technicals look like on daily charts to find potential trade setups and entry points based on daily charts that I want to be involved in. And I'm combining that with an understanding of the news that's coming in. I would consider myself broadly to be like 85% technical in my focus, technical analysis, and 15% fundamental. I do think fundamentals matter. I do think having an understanding of the news and the events and everything that's going on matter. And it's actually one of the things that I also enjoy most about trading, believe it or not, is well, it's easy to believe, is kind of understanding the story and everything that's going on. At 8:30 in the morning, I've gone through my names for the most part. I've created a list for myself of, it's like my go-to watch list with potential trigger entries. I share that list to the team. My partner Pat posts an incredible research note at 8:30 a.m. or so every day. I read that research note. It's a big part of my macro thought process. It's where I get my data from on a lot of things. And then I'm doing the morning meeting at 9 a.m. and sharing my thoughts and my information. And then I'm taking a look at what everybody else on the team is looking at. Next thing you know, the market's going to open, and then it's all about execution. So that's how my process works.
All right, great. All right, just a reminder for everyone who is still here live, submit your questions now so we can get to them. We only have a little bit left in our time here, so we want to make sure we're answering them. Our next question comes from Watson, and he asked if you see us going back into the bear channel or going higher from here.
Sure. So when you're dealing with a range-bound market like the S&P has been in, you could easily make the argument that it's a 50-50 probability actually right now on which way we break. With that said, we actually started to break up a little bit today. Some of that probability, because of today's price action, actually probably moved more in favor of the bulls. So based on that, and this has been one of the really difficult things about analyzing the market the last few weeks since the SVB blow up, has been when you're doing your technical analysis on the important indices, the Qs look incredibly bullish, the IWM looks incredibly bearish, and the SPYs look incredibly neutral. So it's very difficult to decide which way should this actually play out.
Yeah.
So we'll obviously see. I have had a bullish thesis on this market though throughout this process. My thought process is, yeah, these regional banks might be in trouble, but I think the big banks are going to come out as strong as they ever have been, and you got the Nasdaq that's just absolutely leading this market. So the big thing is, can the IWM actually break up? Now, what we've seen over the course of the last year and a half, since the bear market started in the beginning of 2022, where that's when we topped out, is that the IWM is the leader. So usually what ends up happening is that whichever way the IWM is going, the rest of the market's been following. Right now, the IWM is bearish. So if the same playbook from the last year and a half plays out, the market actually will break down. But I think that this situation is unique to the other technical situations we've seen in the market because it was created by a specific news event. And assuming that this banking crisis is something that we're able to move away from, I'm more inclined to think that this market breaks up, especially when you start to look at, so one of the things that I love to pay attention to is positioning and sentiment. And this all comes primarily from Pat's morning note, his research note, where it's where I get a lot of this stuff from. Positioning and sentiment. We as a team in the Prodesk VTF did a phenomenal job, if I can give us some credit, pretty much calling every bear market rally that we had in 2022 from lows. And it almost always played out the same way. We started seeing data where the hedge funds are net short, they're massively in cash, no one's positioned for an up move. And then next thing you know, the market's breaking up and is having a rip your face off bear market rally that eventually fails, but sometimes it fails after a 15% S&P bounce. And the interesting part right now is that the market's nowhere near lows, but positioning and sentiment are back in those same spots that are very similar to where we saw bear market rallies in 2022. You look at the amount of money right now, you can look at the charts of how much money is flowed into money market funds. Everybody's in cash. Funds are positioned short. The maximum pain for the market, and the market does tend to like to move into the maximum pain direction, I really think is to the long side. And if we start breaking up, everyone's under position. The shorts get squeezed, the longs have to come in, the performance chasing begins to happen. Now, that could be short-lived. I'm not saying that we're not going to have a recession. I'm not saying that, Mike Wilson and some of these sell-side analysts who, are saying that the market is expensive are necessarily wrong. I'm just saying it doesn't have to happen on April 1st. You could get a huge upside rally and upside break of this market. And then over time, we'll see if a soft landing plays out, a hard landing plays out, what happens with the interest rates, does the Fed break things further, does a financial crisis happen? I find that I'm decently good at predicting what can kind of happen over shorter periods of time, the next, today, the next week, the next month. But if you ask me, what's going to happen 9 months from now or a year from now, I have no idea. So many things can change over that period of time. And maybe, the recession calls end up being right. Maybe they don't. I really don't know. But right now, the market technicals are holding in great. The IWM had an inside day and up today. The Qs yesterday gave a continuation hammer and broke higher. The Qs closed today at the highest price that they've closed at since August. The S&P, the SPY got back above 400 today. It's at the beginning stages of a breakout also. So there's just a lot of technical information and like kind of statistical, historical data information that's looking really bullish right now. And obviously we'll see how it plays out, but that's what I'm positioned for.
All right, we have two more questions to get to. We have a second question from Connor. He asked if you invest outside of equities personally to diversify income streams.
I don't want to overly talk about my outside business activities that I may or may not have.
Totally fine.
So I won't say too much of, I won't get into a lot of detail on stuff. I mean, I would say that I do have, like a couple other accounts that are more meant for like retirement and things like that are not active trading accounts. And I really don't recommend to people, I know a lot of people do it, I really don't recommend to people that they like overly actively trade their retirement accounts. You're just kind of playing with fire. I've got my day trading account, that's my active trading. That's where I'm trying to make income for myself as a professional trader. But I've also got, buy and hold accounts, an IRA, things like that that are meant for me to sit in this stuff till I'm in my 60s.
Mm-hmm.
And that, and for that, I prefer, I don't want to overly generalize, but I like to sometimes have stocks in like an IRA or holdings in an IRA that I wouldn't necessarily actively trade, like a Procter and Gamble as an example. Pretty sure
Mm-hmm.
for disclosure purposes that I might have Procter and Gamble in my IRA. That's not a stock I like to actively trade. It just doesn't move well. But
Yeah.
it's safe. It makes a dividend. I feel confident that I could probably hold this thing for the next 40 years or whatever. Or some replays in there that are higher dividends that gives me some real estate concentration where I don't actively trade REITs, but I can bring in
Mm-hmm.
that dividend. I can have some real estate exposure. Doing that. I don't
Yeah.
really do anything with crypto. I might have like a little bit of like Ethereum. There were times in the past when I've had a little bit larger Ethereum and Bitcoin. I liquidated that stuff. I just don't. I just can't wrap my head around. I'm probably gonna upset some people. I can't wrap my head around the actual use case of any of these cryptos. I think that they're. I don't think you're diversifying yourself, honestly, if you're involved in crypto. It's actually interesting because they say that Bitcoin and everything is supposed to be a hedge against really bad events, but it
Mm-hmm.
hasn't been a hedge for any bad event that we've had until this recent little banking crisis.
Yeah.
So it's actually the first real use case I've seen where it's actually followed through. But for the most part, when we have COVID and the stock market's going down, your Bitcoin's going down. So it just
Yeah.
it just seems like
Mostly follows the action of the equity market
yeah, high
mostly.
beta exposure has not decoupled from the currency or equity markets like it's supposed to.
Yeah. All right. Our last question comes from Evan, and he asked, this is, a longer term outlook, and you said you're not the best at these, maybe. No one really is, I would say. But Bank of America is saying that we're heading into a recession in the third quarter. Looking further, do you think we're entering a period of stagflation?
Sure. So Bank of America is not the only one. Pretty much all the sell side analysts, J.P. Morgan, Morgan Stanley, Bank of America, they've all been calling for recessions for a while.
Mm-hmm.
So you said Bank of America is calling for a recession in the third quarter. Well, I think at the end of last year they were calling for a recession in the first quarter, and then they
Right.
were calling for a recession in the second quarter, and now they're calling for a recession in the third quarter. I'll tell you what, eventually they'll be right. Someday
Right.
we're gonna have a recession.
Yes.
Maybe it's the third quarter. Maybe it's in 2027. I promise there will be a day someday in the future when we have a recession. When? They apparently have no idea either because they keep having to push it out and push it out and push it out.
Mm-hmm.
Uh,
Yeah.
Stagflation is definitely a scary part of it. I mean, look, I tend to be an optimistic person, kind of by nature. I like to believe that the U.S. economy will be able to find ways to grow through technology and everything else that can enable us to, in time, thwart stagflation. Could we get it for a period of time at the end of this year, early next year? Sure, we could. I don't think that's going to be something that's necessarily here to stay for a long time. Though my biggest concern right now, and I mentioned it really briefly, and this circles back to the question, is the Fed potentially losing its tools to combat inflation.
Mm.
So and that's why I think these next inflation numbers are so important. I do think inflation is going to continue to go down, but like I was saying at back in like October, I had a great call that inflation was going to peak and start coming down, and I timed it really well. And then at the end of the year, when everyone started to think that inflation was going to go straight down, now I was saying, hold on, has anyone ever seen an uptrend or a downtrend in the market? Downtrend's a pattern of lower highs and lower lows. We can continue to work inflation down over time, but you got to be crazy if you think that there's going to be no spikes or no hot numbers that pop in throughout that
Yeah.
period.
Mm-hmm.
So we could see a recession again, depending on what credit tightening looks like. We could see that in conjunction with inflation that's stickier than anyone wants it to be, and then we've got a little bit of a problem. But I think
Mm-hmm.
that even if that kind of more worst case scenario happens, that it's something that we get through, and within a couple of years or whatever that actually worst situation happens, give us a couple of years after that. And I think
Yeah.
you give yourself a couple years of wiggle room there, and you're working your way out. And maybe that type of situation creates a fantastic buying opportunity.
Yeah. Okay, I said that was our last question, but we do have a good follow up to about personal IRAs and Roth IRAs
Keep them coming.
accounts outside of T3. And so this is kind of a T3 trading group specific thing. Steve asked if T3 requires prior permission for each individual trade before you make trades in your IRA.
No, they do
Okay.
not. When you are registered with a FINRA broker dealer and you're
Mm-hmm.
licensed, like I am,
Mm-hmm.
there are disclosure practices that have to be in place.
Mm-hmm.
So T3 is well aware of my outside accounts. Pretty sure they get duplicate statements,
Mm-hmm.
but I do not have to get pre-approval. I can trade in them more or less as I please. The
Mm-hmm.
only real rule that we have is that you cannot trade the same stock in the same day in both your personal account and in your professional account. So if I
Okay.
traded Apple today in my T3 account, I can't buy or sell Apple in my retail account. And that's done to help the compliance department avoid any potential illegal activities like hitting your own bid, taking your own offer, painting the tape, things like that. You can't be, trading to yourself amongst multiple accounts. It's illegal. So yeah, for the most part, there are no rule restrictions. We do restrict the amount of outside accounts
Okay.
as kind of a general rule. Which if you're interested in getting involved in T3, feel free to shoot me an email. I'm happy to have a conversation with you about all the details that you would need to know about being involved with us.
All right. Okay. So for everyone that has joined us today, thank you so much for joining. And to Derrick, thank you for joining us today. I am posting in the chat a link for our next event. That will be next Wednesday, April 5th. 5th, yes, with Derrick's counterpart, Patrick. He's mentioned him a bunch of times throughout this event. Patrick is the co-moderator of the ProDesk of ETF alongside Derrick. And as Derrick has talked about, does a ton of research for the room and all of the traders there. So thank you again, Derrick, for joining us. And for anyone else, or for all those joining, I hope you join us next week to hear from Patrick as well.
My pleasure. I've really enjoyed today's streamcast. Is that what we're going with?
I guess we can call it that. Yeah. Yeah.
All right. Thanks,
All right.
Greta.
Have a great rest of your day, Derrick.